Good morning, traders. This is Ed Carter with the Trader Vision 2020 featured trade idea, the setup and trade plan for Tuesday, July 31st, 2018. Today's trade idea will be a short. UA Under Armour has been in a downtrend here. You can see for the last, let's call it, at least let's call it a month. It has taken out what has been a significant support level in the past here yesterday. We'll be looking for that to hold now as resistance and looking for continued fall. We'll look for support. We'll be looking for resistance from this high here to be providing protection for that initial stop. Looking for a line across these this resistance level down here as our first target, and the second target on down to the resistance levels above this high, which will probably be about the 200-day moving average when we get there. So this is a blue ice failure. We had the blue ice, the 50-day moving average trending higher. Excuse me. We fell down through the ice. We tried to climb back out of the ice hole and failed to do so, fell back down through, and that pattern originator would say that would cause us to drown and fall down to the next level, which is the 200. So that's the trade I'll be looking for. Let's see, can't make it a little bit bigger to make it easier to see. There we go. And let's see if we can't find a trade plan. Okay, let's see here. UA is a short. It just reported, so earnings are out of the way. We have plenty of time. We do have some things running against us here. We've got the long-term market biases up, although it's certainly been down recently, and the long-term trend of the ticker is up with the market. But in the short term, relatively short term, everything has turned down here. We do have the T-line below the 34 EMA, and we've got nice bearish patterns in place. You could even say that this is, if you really stared at it, this could be called a dreaded H. So let's see if I can't draw that for you. Here's the back of the H, there's the up, and there's the down. So that's the dreaded H that I would be looking at as well. So let's look at this as a one entry, two exit trade. I'll be looking for an entry any place below this blue line, which was at 1886. So I'm just going to put that in at someplace inside of yesterday's candle. That would be ideal. So let's put 1886 as an entry. Stop up here just above this support line, resistance line now above. So let's call that $20.05. So that is a fairly large stop. First target down here, let's call it, let's see what 1690 does. Whoops, 1690. And a second target down here about, let's call it 1590, just for consistency. It says we can do 126 shares. Let's see what we can look at here. 150 shares. That's still only 2.76, but because of the width of our stop to entry, that is going to give us $178 of risk. So let's see what happens if we sell half at that first target, or buy to cover. half at that first target. Be picking up 10%. If we had to sell the whole position there, we'd be making less than 300 bucks, but we'd also only be getting 1.65 to 1. That being the case, let's look in this and see if it's tweakable. And V-stop's right where I put my stop before. Suppose I could come down a touch. It's not going to do much to help us, but it might help a little. You can see the resistance level here that we're looking to protect our stop with, and the one that we took out yesterday, which is essentially the same as this breakout level. I think we could actually put a level right across there. Let's see what that looks like. On the weekly chart, we've got 1, 2, 3, 4, 5. Might call that 6, 7, 8, 9 touches, which is plenty. So that can be the new protection for our stop. Let's go back to the daily and see what that would do for us. That would tighten us up quite a bit. That would actually move our stop down into someplace like this. I can buy that a lot better. So let's call that 1946. Nothing else changed, same entry. So what would happen there? That would take us down to giving us almost, well, a little over 3 1/4 to 1. It certainly wouldn't change anything about our first target here. And it would not change what we would get at that first target. But it does improve the reward, and it reduces the risk at the stop. So I like that a lot better. It still gives us a little over 3% stop loss. So that's doable. And that would be 3 1/4, a little over 3 1/4 to 1 at that first target. Let's see what happens if we can hold on to half down here to this second target. That picks up almost, it's 15.5% on that second target, giving us a 13% trade overall, which is 4.1, and we would actually make our trade goal. So this will be our trade idea for today. Please evaluate this against your view of the market. My view in the short term is bearish. We seem to be pulling back. Also against your trading style and your trade criteria and rules. If you do take it, I wish you the best of luck. And if you, well, either way, we wish you the best of luck in the market today, and we hope to see you in the trading room.